Hey guys, in this video we are going to discuss about Naked Forex Chapter 9, The Big Belt. It is a great to be a blonde with a low expectation. It is very easy to surprise people. Camila Anderson. What is a big belt? The next catalyst. The big belt is much like a brilliant peak experience in life. A big belt is a very significant occurrence in the market. Big belt rarely occur, and when they do, they will nearly always occur on a support and a resistance zones. The big belt will nearly always occur on the very first day of the trading week after the market has had some time to think about a fair price over the weekend. Unfortunately, many traders are a bit too excited when the market started trading again for a new week. Many traders are thinking about what happened the previous week because traders are thinking about the world events of the previous week. The market often makes some extreme jumps on the first week of trading day. Unfortunately, this earlier excitement is often misplaced and pushed the market to a place that is a bit too far. When this occurs, a big belt will often appear on the chart. There are two types of big belts: big bearish big belt and bullish big belts. Once you understand the basics of the bearish big belt, you can easily apply your knowledge to the bullish big belt since the trade setup are simply opposites. The bearish big belt. A bearish big belt will occur at the market high and a bullish big belt will occur at the market low. In these both cases, the belt will print on the zone. In figure 9.1, we see that the bearish big belt on the AUD/USD daily chart. The definition of the characteristics of the bearish big belt will be is the jump in the market price in the forex. Bearish big belt nearly always suffer face on the first trading day of the week. The market opened much higher than the closing price of the previous week and then steadily trades lower, eventually closing near the low of the candlestick. The candlestick has a belt-like appearance. The opening price is near the high and the close is near the low. Naturally, bearish belts will also stick out above the recent price. Notice that the bearish big belt pins on the 0.9335 zone. This is a critical zone because the market reverses here after touching the zone for 4 months prior. Because big belt will always have an opening price near the high of the candlestick and closing price will be near the low of the candlestick. A bearish big belt has an entry very similar to the bearish kangaroo tail or a bearish big shadow. A sell stop is a similar place just below the low of the bearish big belt, placing a entry ensuring that the market must make a new low before the trade is triggered. This will ensure, of course, enable to avoid many losing trades, particularly those signals that follows rising market. If the market never falls to the entry price, the trade will never be triggered. Bearish big belt often occur at a critical turning point when the market has become extremely excited. This excitement is translated into a bearish big belt into a signal that the market has gone up too far. If you take a look At the bearish big belt on the chart, you will see that the historical daily bearish big belt have an exceptionally high win rate. Test this for yourself. Scroll through the historical chart and record the market movement after the big belt, or test them in a Forex testers or your chosen program. For backtesting, you may surprise with the win rate of the big belt trading setup. Although it is a common to see bearish big belt on the lower time frames such as 1 hour chart and 4 hour chart, sticking to the daily chart only will enable to maintain a high win rate when the trading these setups. So although it may be tempting to multiply your trades by taking big belts on the lower time frame, it is probably a better idea to either stick to the daily chart for this naked trading setup or be very selective with the trades you decide to take on the lower time frame, as many of the other naked trading setups are easy way to exit your bearish big belt is to simply wait for the market to reach the very next zone. See in figure 9.2. This is often simplest way to capture the large chunk of move. Again, remember that the bearish big belt often print at a critical market high, so they are offer an excellent opportunity for you to take a bit out of a big move in the market. The stop loss for the bearish big belt is placed above the high of the belt. If the market trades higher than the high of the bearish big belt, then obviously the belt has not identified a key turning point in the market. Take a look at the bearish big belt trades in figure 9.3. 9.3 बोला ना मैंने क्यों? The bearish big belt is an excellent trade setup. You simply have to wait for them to occur. If you are watching only the major currency pair Euro USD, USD CHF, USD JPY, GBP USD, you may be office occasionally you may be occasionally luck into a bearish big bell trade, but if you expand your scope and look at many other currency pairs like NZD JPY, Euro CAD, and JPB CAD, etc., you obviously have much better chances to catching one of the bearish big belt setup. Backtest this bearish big belt setup on your own to see the profitability and success. These trades may be for you all of you have to just be ready. The bullish big belt the other big belts are of course the bullish variety. Bullish big belts are important catalyst that hints at the market moving higher. A bullish big belt will often print at the important market low on the zone, and the bullish big belt candlestick has an opening price much lower than the closing price of the previous candle. The bullish big belt will have an opening price down near the low of the candlestick, and the closing price will be up near the high of the candlestick. In figure 9.4, a bullish big belt is on the EuroCAD daily chart. This bullish big belt prints on the 134,330 zone. This is a critical zone because the market reverses here after touching the zone 3 months prior. The bullish big belt will often have an opening price near the low of the candlestick, and the closing price will be near the high of the candlestick. The Bullish big belt on the EuroCAD daily chart. Figure 9.4 is an excellent example because the bullish big belt daily candlestick prints on the important zone at 1.3430. The interesting thing about this particularly bullish big belt is that the lower of the candlestick is big lower than the opening price. This is not an ideal but the most important characteristics of the bullish big belt candlestick holds true. In this example, the closing price is a very near than the high price, and this is an absolute critical for the bullish big belt setup, just as it is a critical for bearish big belt setup to have a close near the low of the candlestick. Take a look at the chart again in figure 9.5. Here you can see that the stop loss is down below the low of the bullish big belt and the buy stop is placed a few pips above the high of the bullish big belt candlestick. The trade the triggered only once the market trades higher than the bullish big belt. This this trade easily achieve the profit at the nearest next zone of the 1.3885 area for the profit of 3.313 pips. All through the bullish big belt trades in an excellent trade, and many traders will find a high percentage of percentage associated with this trade. There are losing trades, just there are for all the trading setup. The next bullish big belt example is in figure 9.6. This is a weekly USD CHF chart. Note that the stop loss is placed below the low of the bullish big belt candlestick. The candlestick has a good form. The opening of the candlestick is down near the low of the candlestick and the closing price is up near the high and the buy stop is placed a few pips above the high of the candlestick and this entry price is easily triggered during the next candlestick. In fact, the market pushes all the way up to the very next zone. However, the risk on the trade is 2.2110 pips. However, the risk on this trade is 210 pips from the buy stop to the stop loss, and the first zone is only 180 pips away. There, for the some traders, many be more comfortable with a profit target placed at the next zone. 1.2450 is a full 425 pips away. This further profit target is obviously allows for a much more favorable rewards to tips to trading the big belt. The rules for the bearish big belt and the bullish big belt are essential the same way, but in reverse. The important thing to remember for catalyst are as follows. All bullish big belt candlestick have an opening price that is lower than the closing price of the previous candle. Likewise, all bearish big belt have an opening price that is higher than the closing price of the previous candle. The bullish big belt must have an opening price near the low of the candlestick, and it must also have a closing price near the high of the candlestick. See in the figure 9.7. The reverse is true for the bearish big belt. The opening price must be near the high of the candlestick, and the closing price must near the low of the candlestick. See in figure 9.8, even more critical, the big belt candlestick must print on the zone. If the big belt candlestick is not on a zone, the odds of the trade working out fall considerably. Likewise, the very best big belt have room to left. Similarly to the ideal kangaroo tail, those big belts that do not have much space have a low rate of success. See in figure 9.9. In summary, big belts are extremely powerful catalysts. Provide day prints at the right spot on your chart. In the list that follows, you will find a summary of the catalyst of both the bearish big belt and the bullish big belt. Characteristics of the bearish big belt. The opening price is higher than the closing price of the previous candlestick. The opening price is near the candlestick high and the closing price is near the candlestick low. The big belt prints on the important zone. The big belt should have room to the left and the stop loss is placed above the high and the stop loss, the sell stop is placed below the candlestick low. The close zone is the profit target. Characteristics on the bullish big belt. The opening price is near the low of the candlestick. The closing price is near the high of the candlestick. The big belts prints on the important zone and the big belt should have the room to the left. The stop loss is placed below the candlestick low. The buy stop is placed above the candlestick high. The closest zone is the profit target. Let me tell you this strategy in an easy way. Let's say market is in the support area and market have created bullish big belt. What in a easy way what bullish big belt signifies or what a candle is really in the chart is it's a big candlestick which appears on the support area or a extreme point or where there is a huge space on the left and let's say a extreme area where the market have created a demand or a support area. There will be a bullish big belt and you can put your stop loss below the area, below the candle, maybe few pips below the candle, and you can put your profit target at the high of the next zone, and you will find this type of candlestick in mostly in 4 hour time frame and in daily time frame and try to trade this strategy on the pairs which are not liquidate that much. Maybe don't, maybe don't. What I mean to say about don't trading the most liquidate pair. I mean to say that don't trade Euro USD, USD CHF, USD JPY, JPB USD, because these are the major pairs and you will find more liquidity in this. Either except that you can trade NZD JPY, Euro CAD, JPB CAD, and I like to trade like for me, I trade these kind of setups in these pairs, and you can also trade AUD USD. That is the pair which I like, and you will find these kind of setups on that pair too. Thank you for watching.